Hey guys, what's up? This is Rudy Bester from BesterInvestor. In my previous video, I mentioned that I would be making a short presentation about Occidental's acquisition of Anadarko, and I thought that I'll put together just a couple of uh, screenshots of the sort of highlights reel of the acquisition to share with you. But as usual, before we go into any video or presentation that I make, there's the disclaimer. Remember, this is not investment advice. At BesterInvestor, we do a little bit of homework for you, but at the end of the day, what we're doing is we're creating videos for your entertainment and for your information. If you take any of the information that I share with you to heart and use it as investment advice, you are going to lose all your money. So I suggest that you really do your own homework and make good quality decisions and informed decisions before you allocate capital to things as risky as stocks in the marketplace. But on that note, let's talk a little bit about Anadarko's acquisition by Occidental. So here's the highlights reel. Oxy completed the $38 billion acquisition of Anadarko last year. It was, I think the deal was executed in August of 2019 or thereabouts. The Anadarko shareholders approved the deal, so actually 99% of the voting shareholders approved the deal, which created a mega merger. It was the biggest one in 3 years and combined two of the largest oil producers in the Houston area. It also launched Oxy on a quest to integrate the companies, obviously cut costs and integrate assets. If you think about it from a practical point of view, two massive multi-billion-dollar corporations that merge no longer require two sales forces, two accounting departments, two marketing departments, etc. So those mergers have to happen regardless. The other challenge that they have is integrating the 16,000 employees. Anadarko had about 11,000 and Oxy about 5,000. Or maybe it was the other way around. I'm not exactly sure, but anyway, the combined workforce is about 16,000 employees, and then you got to make some serious and very difficult decisions as well on the futures of those employees, because if you are integrating different departments, like I just mentioned, sales and marketing and finance and so on, you effectively have, in theory, two people doing one person's job in the combined new company. The other thing that's interesting there is that the merger set Oxy up as the largest player in the Permian Basin, and certainly a top producer in the Gulf of Mexico. There's a couple of interesting footnotes attached to this. Anadarko's African assets were going to be sold to the French company Total, headquartered in Paris, which included a massive liquefied natural gas development and export project in Mozambique. I'll give you a little bit more information on that one in just a second. Of course, most people who've been following Occidental, or otherwise who follow Warren Buffett, know that Berkshire Hathaway cut them a check for about $10 billion to help finance the deal, which allowed Oxy to offer nearly 80% of the bid in cash. The reason why they bid so much in cash is because it nullified a need for Occidental shareholders to vote, which upset a lot of shareholders, including majority shareholder Carl Icahn. I haven't looked at the latest filings in terms of Carl Icahn's holdings, but I think he owns as much as 10% of Occidental. At the time of the deal, he owned about 5%, but he's increased his position since then. And of course, we've all seen Oxy's stock price crashing, which was exacerbated by the fact that the oil prices just tumbled after that. So let's look a little bit at this deal with Total. So Total is a French major oil and gas company, and they had agreed upon execution of the acquisition of Anadarko. So once Oxy had successfully completed the acquisition of Anadarko, they had agreed that Total would buy the new merged company or Oxy's assets in Ghana, Algeria, Mozambique, and South Africa. They valued those assets at about $8.8 billion. So if you think about it, just from a practical point of view, So Berkshire Hathaway wrote them a check for 10 billion, and then they were about to sell assets worth about 9 billion, almost creating a liquidity event matching the debt commitment that they had signed up for. So Total actually purchased and successfully executed the acquisition of the Mozambican and the South African assets, but it no longer has an interest in the remaining assets. Ironically, the difference between the assets that Total has acquired and the assets in Ghana and Algeria that they did not acquire is about 4.5 billion. So 4.5 being half of 9 billion, the OXY Total deal was about 50-50 in terms of what they had originally proposed, which was 8.8 billion, more or less. What's a few billion between friends, huh? If we look at free cash flow and asset sales and debt for Oxy, so geez, over the past year or so, Oxy's been scrambling for survival because it took on a lot of debt to acquire Anadarko, and then in addition to that, oil as a commodity just crashed. At one stage, oil was virtually free, and if you bought the futures, it was less than free. So they'd actually pay you to take some. Um, the cratering crude oil prices obviously disrupted Oxy's plan to use their free cash flow and assets to pay down debt. So they've been looking at different ways to kind of strengthen their balance sheet. Especially because they got a large amount of debt that's going to be maturing next year. What they did very recently is they tapped an alternative cash injection and they issued new bonds to the tune of $2 billion. This is sort of no different to a homeowner refinancing his home loan. So if you have a mortgage and mortgage the 30-year mortgage on your house for 4.5%, 5.5%, and you can now get it for 3.5%. You may as well refinance and get the lower rate. The difference here is that Oxy, because of its credit profile and need for cash, is paying quite a premium for its new debt. So it's an interesting question. Where does Oxy go from here? Oxy to me is very interesting. Otherwise, obviously, I wouldn't be making videos about it. But it's a high risk, or otherwise you could say it's a speculative investment if you want to go the route of investing in Oxy. I actually hold Oxy long, and I have a few thousand shares. So I am an existing investor. So I'm interested in Oxy for a variety of different reasons. The company's decision to refinance its debt is a good one, but the terms are not so great because the interest rates are so high. Some people, some analysts say Oxy might have been better served selling some of the other assets on their books, but it just depends who you ask. Obviously many analysts don't own the stock. They just look at ink on paper, as it were. So there are many different ways that you can view this. What is very interesting, though, is that the new distribution of warrants will help duplicate the shareholders. The strike price at $22 is actually decent, and the 7-year term is very decent. So this could create a lot of future value for shareholders. I talked a little bit about this one in my previous video, where you could say on one hand Oxy could go to zero. It could file for bankruptcy, or Oxy's price could tumble from where it is now at around $18 to $5 or whatever, which means the warrants are basically underwater and worthless. On the other hand, Oxy could be trading within the next 7 years at $50 or $100, which will allow existing shareholders to exercise those warrants at $22 per share. So if you're buying a $22, if you're paying $22 for a share that's trading on the open market at $100, it's a nice gain that you can tuck away. Obviously, it's going to be a taxable gain, but anyway, it's still a nice gain. This is something that people may not be familiar with, but EOR, or enhanced oil recovery, is actually a way of capturing CO2 emissions and reducing it or nullifying it. And Oxy is a leader in the enhanced oil recovery methodology. It's a technologically advanced method of bringing production to the surface. And what it does is it actually uses an injection of carbon dioxide to flood and significantly extend the economic life of producing fields. Instead of being left in place, remaining oil is developed, so it's got a kind of like nothing left behind while you're re-injecting the CO2 back into the area where they are using fracking. It's certainly a more efficient use of existing hydrocarbon resources. And in addition to that, it's obviously adding to the domestic and global energy supplies and demand. A quick look by the numbers. OXY's debt to capital ratio is 55%. It's actually in line with the oil and gas industry, there or thereabouts. More interesting is the fact that with an interest coverage ratio of 2.6 and a quick ratio of 1, of more than 1 or greater than 1, the company should be able to comfortably repay its debt. Its earnings have been weak. Over the most recent trailing 12 months, OXY has TTM is trailing 12 months. OXY lost 4.33, so $4.33 per share compared to the previous period's profitable results. However, it was also expected because of the industry's crash and decline because of the oil price collapse. Interestingly enough as well, although OXY is losing money on an operating basis, it is typically very profitable from a gross profit point of view. It just doesn't do a very good job in terms of its generating good operating and net profit margins as of today. Warrants are new. What's next year? So this was just like a week ago. They announced the distribution of warrants to existing stockholders. The stock date of record is July 6th. That's this coming Monday. Today is Friday, July the 3rd. The OXY common stockholders will receive an eighth of a warrant for each share that they hold, or the other way around. For every 8 shares that you own, you will get 1 warrant, which will allow you to buy Occidental shares in the future for the next 7 years at $22 per share. Nice deal for existing shareholders. Kind of sweetens the pot a little bit, and it's not dissimilar to a large publicly traded company offering stock options to its executives and management employees in order not only to retain them but also to give them some future wealth creation further down the line. To wrap it up here, if you want to connect with me, you can obviously make comments on this video. I'd like you to hit the like button if you like the video. You can subscribe, but you can also find me on LinkedIn at Rudy Bester. I'm on Twitter and Parler at Rudy Best. I know there's a lot of noise pollution on things like Twitter, and sometimes I add to the garbage. If you can ignore that, that's great, but you can certainly find some interesting hidden gems and information about investing your money on platforms like Twitter. You're welcome to email me at rudy@memorytrees.co. Memory Trees is our charitable foundation and also affiliated with MTC Equity Partners, which is our Opportunity Zone fund that invests in distressed properties in lower income communities. If you're on Facebook, you should probably delete Facebook because it serves no purpose unless you want to really take time to share your new pair of shoes or what you had for lunch with all your friends. But I've given you a variety of different ways in which you can connect with me. So if you ignore my quick stab at Facebook, there are a couple of ways in which we can connect and chat and continue the conversation. Until next time, this is Rudy Bester signing off for BesterInvestor. Thanks for taking the time to watch my video, and we'll see you next time. Bye-bye.